G'day everybody, this is Johnny Seville from Acorn Wealth Corp here, and this is your executive summary for stock setups for Thursday. The S&P 500 today rallied up, kind of still holding right up in this resistance area. It's actually sitting a little bit on top of the line we have, but again, that line could be a little bit either way, but basically we are sitting right on top of that kind of resistance area. If you see when I zoom in, you're just kind of sitting right on top of that little move, that short-term moving average and resistance. Now, obviously, we are going into open range. And actually, if you have a look at the way that the market moved today, it was a downward channel throughout the day on the hourly chart. And you can see that we've rallied up right into that downward channel target. Now, this could end up resulting in a flag, which would be a continuation further upwards tomorrow, but it's a little bit early to tell. We'll see if it starts to break higher in the pre-market trading tomorrow to confirm that pattern. But right now, things are still kind of holding a gradual bullish trend. But again, we are going into the end of open range, and a new open range is going to be set on Friday. And then, of course, a signal on Monday of whether we're going bullish or bearish. So the interesting thing about the market is that it's really a split market. So I looked on Finviz today about how many stocks went up more than 4%. Only 200 stocks in the entire market went up more than 4%, but over 400 stocks went down more than 4%. So we're certainly seeing action in both directions. And in fact, if you were someone looking for a 4% gain today, you would have had twice the probability finding it looking for shorts than you would of longs. So that just goes to show that while the market rallies, there's still more action to the downside than there is action to the upside. So while the market's going up, there's more rotten apples dropping from the tree than there are stocks soaring, I guess, is the takeaway from that data. Now, so a couple of updates here. EPC is holding quite nicely so far. As you can see, that's on the daily chart. We're continuing to push as it currently stands. Excuse me. Still trying to push. So that's looking good. AVGR had a nice rally. We'll go to the hourly chart. It rallied back up. What was it? Yeah, it was about 7%, I think it was. Now, it's holding the moving average, so it is already up 20% from our entry signal. So I wouldn't be afraid of taking a bit of profit here and protect the rest with that 123 stop loss we talked about in Trading Room. Lyft reported earnings after market today, and it's had some good results reportedly. So watch that tomorrow if you are holding it, because it's likely to have a aggressive move in the morning. And of course, our target's at 52.75. So see if you can watch that. If we get lucky, it may hit the 52.75 target. So those are the long setup updates. Now, in the interest of what's going on in the market, for those of you that tuned into Trading Room on Tuesday, obviously I talked about, if you were looking for basically the patient trade here is just to do nothing, to wait until a new open range is set and wait till next week for some trades. Or if you're a more aggressive trader, to try and kind of look for ones where there is a very tight stop loss, and obviously look for trades in both directions that look good. So I wanted to provide you with some ideas that kind of play into that for both the bullish and bearish direction, which could either be trades for you for this week, or they could be ones that you could wait on until open range gives us a signal. Either way, I wanted to share with you some ideas that play into what I talked about on Tuesday. Whether you want to trade them or not, I still want to share with you kind of the mentality. So, for example, FCAU is one. Now, this is the hourly chart we're looking at here. As you can see, we had a big flag. We've had a big flag there yesterday, and we had another flag here today. Now, these guys report earnings tomorrow morning, so keep an eye out for basically a break here. If you're able to snag it just above so again, it could gap down. The earnings could be bad, but if earnings are good, there's obviously a flag formation here that could, if you can get a good price for this could have a very sharp rally. So obviously, the way that I'd play this is looking for a break above 15.31 and looking at a stop loss of 14.92. My first target would be 16.12, second target of 17.93. Again, so that's a after earnings potential breakout play. So check that one out. We've also got MED. Now, MED is a downward channel breakout, as you can see here. Downward channel breaking out, and as you can see, the first target there 121.49, second target 136.69. So we'll go into the hourly chart to look at the support system. So again, you can see this kind of small flag there on the hourly chart. So once again, in line with what I talked about on Tuesday night's trading room, you could look for a break of 113 and 13 cents with a stop signal of 111 and 13 cents. So it's only a $2 risk from a stop loss standpoint, with a first target of 121.43. And again, the second target of 136.69. So, obviously there's a 5-to-1 risk-reward ratio on the first target and significantly higher on the second target. Okay, so just kind of playing into that mentality of not being afraid to stop out, setting close targets. Now, AES is another one. As you can see, there's the downward channel structure, even slightly fallen angel-ish, but more so we're looking at this channel breakout here. Now, earnings is next week on the 6th, which is, I think, Thursday. Again, but if this were to break out above 17.27, there could be a target there of 19.32, stop signal of $16.83. So once again, we're only looking at 40-cent stop loss on a almost $20 stock. Okay, so minimal risk. Looking to see if this is one of those ones that breaks out and just has great volume on that break. Very good insider buying on this stock. GLYC is another one. This is a fill the gap kind of trade. Same kind of structure. A little bit, actually the same kind of risk level. Looking for a break above 566. So there's the hourly chart. Again, you can see these kind of flagging type candles. Looking for that to break out above 566. Stop signal coming back to 543, which is underneath the candle and underneath the recent high of the previous flag. And looking for a target of 783. Big insider buying on this one. All right. Now on the short side, so that gives you some long ideas. Again, you can see that GLYC is about the highest level risk with a 20-cent stop, which is about 4% risk. The others are about 2% or less on risk from a stop loss standpoint. On the short side, we've got CSGP with insider selling. As you can see, it's already had earnings, rallied up, hit resistance, is rolling back over. So we can go to the hourly chart. This could easily get back down to 510, where it shot down to after earnings. So you can see that the moving averages on the hourly chart are consolidating. So this could be short if it broke below 549.76 with a first target of 514.13 and momentum from there. Stop signal 565.13. So again, it's about a roughly $15 stop loss on a $550 stock, right? So you're dealing with a very small percentage stop criteria. So check that one out. One of my contrarian trades. Now, this is higher risk, as I mentioned in Trading Room, because we're going counter trend in a bull market, in a bullish open range. So this is risky, but because there's a minimal risk is why I took it. So this could easily stop out, is my comment here. I've taken it anyway because the risk reward is really good right here at the end of the day. So we're up at what I've done is I've taken some January 135 puts, and or you could also look at the 140 puts. My stop signal is at 145.23. We're at 140, well, basically 142 right now. So we're only talking about a roughly $3 stop loss, again, on $140 stock. So minimal risk, but my target is 89.23. So I've got a $60, sorry, $50 potential drop for a $3 risk. The risk reward's just so good that I'm willing to take the trade, even though the probability of success is low because it's going up into resistance. So we're trying to catch the top. Um, if you're looking for something that's downtrending, FSLR. A lot of these energy stocks are under strain. The energy sector is under a lot of pressure. FSLR is one you could look at. Lots of insider selling. I'd be looking at a stop of 54.23. You could also consider January $55 puts. The target I've got is 41.23. However, there is some significant support here at where is it here? At 48.67. So what I would do is I would sell probably a third of my position to just lock in some profits, even though it's a very short, very close target. But if you're in the options, that would at least cover some profit, and then lower the stop loss to whatever the entry price would be for either the option or the stock trade at that point once it hits the 48.67 level. We've also got CONN, which is not ready yet, but maybe tomorrow. It's at its moving average support. It's a pennant formation. If CON breaks down below 23.96, that could be a possible entry. Target of 21.13. So you're looking at roughly $2, 21 to 20. Yeah, a little bit shy of $4 actually. And a stop signal of 25.13. Right, so you're dealing with about $1.16 of risk for $3.80 of reward, for example. So the risk-reward ratio is there. Small stop loss. The other one you can check out, DRQ. Also, all past earnings breaking down, head and shoulderish type of action. Looking if that breaks $40.93, target of 35.37. So we've got a $5.50 potential reward with a stop signal of 42.53. So $1.50 roughly of risk. So again, we've got a good risk-reward ratio there. You can check those out, and there's lots of others I found, but I mean, again, I wouldn't even be taking all these trades. I just wanted to give you some ideas. Maybe you take none of them. Again, we obviously had a chat about this on Tuesday night's trading room, but all of those have gives you a hedge, some longs and some shorts that both have independent strength and weakness for the rest of the market. Obviously, we'll get a lot more excited directionally once we have an open range signal and a market direction as of next week. So there you go. Happy trading. And of course, Greg will be hosting Trading Room tomorrow night. So enjoy that, and happy Halloween for everybody tomorrow. Take care.